This is CNBC's live blog covering Asia-Pacific markets. Asia-Pacific markets rose as investors digested the Bank of Japan's landmark shift in monetary policy and await the U.S. Federal Reserve's interest rate decision. The BOJ on Tuesday raised interest rates for the first time in 17 years and scrapped its yield curve control policy, sending the Nikkei beyond the 40,000 mark for the first time in almost 2 weeks. Investors are also focused on China, with the People's Bank of China set to release its 1-year and 5-year loan prime rates. The 1-year LPR acts as the peg for most household and corporate loans, while the 5-year LPR is the benchmark for most property mortgages. In Australia, the S&P/ASX 200 rose 0.17%. A day after the country's central bank held rates at 4.35% for the third meeting in a row. South Korea's Kospi climbed 1.12%, powered by a 1.37% gain in heavyweight Samsung Electronics, while the small-cap Kosdaq was up 0.34%. Hong Kong's Hang Seng Index also is poised for a stronger open, with SHE futures at 16,629 compared with the index's last close of 16,529.48. Japan's Nikkei 225 is closed for a public holiday. Overnight in the U.S., all three major indexes rose as the Federal Reserve kicked off its two-day policy meeting. The central bank is expected to keep rates unchanged Wednesday. However, a recent slate of worrying inflation reports has investors concerned that the central bank could signal interest rates will remain higher for longer than expected. The Dow Jones Industrial Average gained 0.83%, marking its best day since February 22, while the S&P 500 climbed 0.56% to close at 5,178.51 for a fresh record. The Nasdaq Composite advanced 0.39%. CNBC's Pia Singh and Brian Evans contributed to this report. 8 analysts upgraded their target prices on 2 Canadian stocks in the past week, giving both more than 65% upside potential. They were the only 2 companies on CNBC Pro's global stock screen that have received price target upgrades from 5 or more analysts in the past 7 days, and also have potential upside of over 50%. CNBC Pro subscribers can read more here. UBS has named its high-conviction buy ideas across Europe and Asia. And some if its buy recommendations are poised to captivate and elevate investors' portfolios, according to the bank. CNBC Pro subscribers can read more here. Higher than expected inflation data sent all 3 major stock indexes down last week. But UBS believes that these declines are just blips on the radar of a still overwhelmingly positive U.S. outlook. Such setbacks in the data may cause some investors to lose confidence in the prospect of a soft landing for the U.S. economy, let alone a Goldilocks scenario. But we view these more like speed bumps along the journey, wrote Mark Haffala, the bank's chief investment officer of its global wealth management division. Haffala listed the following 3 key reasons as to why he expects the U.S.